Most people treat a Roth IRA like a magic box. You put money in, it grows, and you take it out tax-free for the rest of your life. Simple, safe, foolproof. Until you learn the rule almost nobody talks about, the one that can turn your so-called tax-free gains into a surprise tax bill. Let's break this down in plain language. A Roth IRA only stays tax-free if you follow two rules at the same time. First, you must be at least 59 and a half. Second, your Roth must be at least 5 years old. Miss either one, and the cracks start to show. Here's the thing. The IRS uses something called ordering rules. And ordering rules decide exactly which dollars you're withdrawing the moment you take money out. You don't get to choose. The first dollars that come out are always your contributions. Those are safe. You already paid tax on that money. The trouble starts when you dip into earnings before the account is old enough or before you're old enough. Picture someone named Jordan. He puts $10,000 into his Roth over a few years. It grows to $15,000. $5,000 of that is pure profit. Jordan hits a rough patch. His car dies. He needs cash. He thinks it's fine because it's a Roth and everything is supposed to be tax-free. So he withdraws $8,000. Here's what actually happens. The first $10,000 he contributed is safe. But because the IRS tracks ordering, once he pulls out more than his contributions, he automatically touches earnings. And earnings taken early get hit with two things: income tax and a 10% penalty. Suddenly, the tax-free box isn't tax-free anymore. And there's another twist. Even if you only want to withdraw earnings later in life, if your Roth hasn't existed for 5 full tax years, those gains can still be taxed. So how do you avoid all this? Treat your Roth IRA contributions as your emergency valve and your earnings as untouchable. The Roth is powerful, but only if you understand the rules that guard the tax-free part. Don't let a bad month trigger a decision that cost you years of growth. Let the Roth do what it's designed to do. Build wealth slowly, quietly, and permanently.